Hey guys, it's Dave again. Thanks for watching as always. If you're new around here, I hope by the end of the video you'll consider subscribing if you enjoy the video. If you're not new around here, once again, every like and comment helps out with the YouTube algorithm, so all that is always appreciated. I always do enjoy the back and forth in the comment sections for sure. So, about today's video, if I told you that I wanted to talk to you about a former space SPAC, one that has met all their projections they came out with before they went public, one that has the longest cash runway of any space SPAC I've looked at so far, you'd probably think I was talking about Rocket Lab, but actually I'm not. The company I'm talking about today is Planet Labs. They are quite an interesting one, and just full disclosure, I haven't invested in them yet, but I am very interested in them, and everything I'm seeing looks quite good. So I wasn't sure if I would ever dive into a satellite company that didn't also have launch, but I may very well end up investing in this company as I continue researching them. We'll have to wait and see. But if you've not heard of them before, what they basically do is image the whole Earth very regularly, so you can get up-to-date information across the entire globe. You can see the changes in real time. You could watch conflicts unfolding, see, a city, how the ground has been impacted by flooding or natural disasters, fires. A lot of interesting stuff they can do, basically make a lot of things searchable about the globe, and they have a lot of data and a lot of interesting things they're doing with it. So definitely a very interesting company, and I'm going to dive into that more as well as the numbers with you right now. So let's take a look. By the way, I was first turned on to this stock by a couple of guys in the Discord. Parth was the OG Planet Labs investor I think I remember talking to about it. He was always talking about it, and I was like, what is this company? I have no idea what he's talking about. And then lately, Jadam has been talking about it a lot recently as well, and a few other guys in the Discord have been really interested in it. So I figured I really should take a look, and to my surprise, yeah, they have been performing quite well, at least in terms of the financials. I still want to dive deeper on what they're doing with their data, their next generation satellites, and all these other technical kind of things. But just from a first high-level overview of their financial situation, I would say they're doing quite well compared to the vast majority of these new space SPACs that have gone public over the past couple of years, most of which, frankly, have quite scary balance sheets. Planet Labs definitely does not. They do have a bit less cash on their balance sheet than Rocket Lab does right now, but they're also burning their cash at a bit of a slower rate. So that's why I said they have a longer runway before, potential bankruptcy or having to raise more money than Rocket Lab themselves do. So let's take a quick look at just a quick overview of the company first of all. So Planet's mission, this is taken from their most recent earnings update, is to image the whole world every day and make global change visible, accessible, and actionable, so you can see what's changing and happening around the globe every day and take action on those changes. So their public benefit corporation purpose is to accelerate humanity towards a more sustainable, secure, and prosperous world by illuminating environmental and social change. So this is also a big one where you can see where those harmful emissions are coming from and put pressure to put a stop to it. You can, catch wildfires, all sorts of things that are important for the environment. I definitely always like to see companies that I invest in have a good mission and not just be only about the money to the detriment of society as a whole, and that's definitely not the case here. So Q4 highlights, so year-over-year revenue growth, 43%. Quite impressive. I think this is a little lower than Rocket Lab's revenue growth numbers, but still very impressive, still strong. Any company I look at that has revenue growth of even over like 35%, I think that's pretty solid depending on the revenue multiple they're trading at, obviously. Strong visibility, so they have greater than 95% annual or multi-year contracts. Now, this is what I love about this company, because with Rocket Lab, the one thing you're always worried about, okay, how many launches next year? How many launches the year after that? How many launches are we getting at this year? What if the customer delays? With the annual or multi-year contracts, you really don't have to worry about it quite so much. And that's why I'm so excited for Rocket Lab's space applications business, which would be, annual steady income where you don't have to worry if it's going to come in every quarter or how much is. That's what I really like about the business model Planet Labs has. So high predictability, 94% of their revenue is recurring and highly scalable as well. In the most recent quarter, I believe 58% non-GAAP gross margin. Now, obviously, this is gross, so take that into consideration when you're looking at it. But still, to give you a point of reference, when we talk about electron or neutron rockets, Rocket Lab is aiming, they're not there right now, but they're aiming to be around 50 to 52% gross margin on those products. So Planet says they're already at 58% gross margin here, which is pretty good. That's compared to 42% in the previous quarter. Their earnings years are really wonky, and I find it quite confusing. So if you do take a look at their numbers, you're going to have to bear that in mind, but I'll talk a little bit about that more later on. And the strong balance sheet I previously mentioned. So we have $409 million on the balance sheet. Little less than Rocket Lab, a lot more than a lot of these other new space companies that I've looked at of late, and they're not burning it as fast as a lot of these other companies I've looked at either. So that makes me feel safe when I'm considering investing in them, whereas some of these other companies I've looked at, I think maybe Terran, maybe ASTS, their cash situation looked a little more sketchy to me. Annual revenue in millions, again, we had that 46% year-over-year growth. Now that is quite a jump up from the previous year, so that does lead you to question whether this is sustainable, that they're going to keep growing 40 plus percent year over year, or if we're going to go back to these lower growth rates where we've had in previous years. And now, interestingly, you can see we've got full year 2023 here. They had 46% year over year growth, and we're obviously still in 2023, and that's where you have to make that adjustment in your head, where they seem to be reporting on a different basis, and we seem to be almost a year ahead. And then, of course, non-GAAP gross margins are expanding. So they've talked about this in a previous slide, over 50% gross margin, but we've got 24%, then up to 38%, and then 53% gross margin, which is pretty good. Now, non-GAAP means they're excluding items which are, not recurring one-time things, to try and give you a better sense of the overall business, but there's still maybe very real expenses that were not included in this, so you always have to take that with a grain of salt. And of course, remember that gross margins are not net, so don't think this company is profitable right now, because they're still burning money despite the 53% gross margin they're reporting here. So then we're just looking at outlook for the next year. This was their Q4 results, so the full year 2023 is basically what we're looking at here. Revenue numbers of 51 million to 54 million for the quarter, and then full year of 248 million to 268 million. Pretty solid numbers there. They're looking for revenue growth to slow a little bit, though. So we're looking for full year revenue growth of 30 to 40%, which, as I said, I still feel is pretty solid for a company, although they are still very much in growth mode and burning capital, and they're not yet profitable. So that is something you need to take into account. Non-GAAP gross margins for the quarter is potential, or for the full year, they're actually looking at hitting 57 to 61%. So if they can get into the 60s, I think that would be very impressive. And if they basically, when you see gross margins this high and the company is not yet profitable, that tells me it's really all about scaling up. And if they can scale up high enough and get enough business, then they become incredibly profitable. Adjusted EBITDA, we're looking at negative 47 to negative $37 million. So the brackets means that this is a loss. A little bit lower than I was thinking. I was hoping they were going to be kind of trending towards positive soon, but apparently not yet, as the adjusted EBITDA looks like it's still burning more and more, as opposed to getting closer and closer to profitability yet anyway. And then capital expenditures as a percentage of revenue, we're looking at 18 to 21%. That's what we're looking at, the guidance for the coming year. And by the way, I do love this because when you're looking at Rocket Lab's earning results, they don't give you full guidance for the year. They give you guidance for the upcoming quarter, but they don't really tell you what they're looking at full year on the exact numbers. So I love that we do actually get this information from the company, and they have traditionally been very accurate about hitting their numbers, which is another thing I love to see. Because, you know, I've seen companies make all these crazy promises in the space industry. We're going to launch every day. We're going to, you know, grow 100% every year, all this sorts of stuff. But we do have a history with this company of actually hitting our promised targets. So as I was just saying, hitting their projections, we have consolidated revenue. Now, this chart is actually from when they went public a couple years ago, and the numbers below are their actual numbers. So if we look at what they were projecting for, we can see that full year 2022, this was an estimate. That's what the E means. Again, that corresponds to 2021 for some weird reason. They were looking at 130 million in revenue. What did we hit? Well, we got 131.2. So they were pretty much right on. Extremely impressive. But again, that was pretty close to the SPAC date, so you could say, okay, they had a lot of visibility in that. What about the next year? Well, the next year they were saying they thought they were going to make $191 million. So they were actually projecting quite a serious growth way back when they were going public. And when you know it, they got 191.2, so they were right on yet again an extra year out into the future. That's extremely impressive. I haven't seen very many companies be right on their projections from their Go SPAC presentation. A lot of these companies made these very exciting promises that were not fulfilled, and it's taught a lot of us investors to be very skeptical, and this is what I like to see, that they are actually doing what they say they will do. Not unlike Rocket Lab, who's actually hitting a lot of their financial projections, unlike a lot of these other companies. Now, gross profit, as again, gross is not net, but we can see that they were thinking full year 2022 estimate was $52 million. Again, that corresponds to the actual year 2021. So a little bit low on that, very close, 48 versus 52. Then the next year, 95 versus 94. So extremely close, the actual numbers versus what they projected. I would give them a pass on this. I wouldn't even really call this a miss. It's just so close that it's pretty much they're hitting their targets. Maybe a little bit, spending a little bit more than they anticipated, but still pretty impressive. And again, we have the gross margin trend line trending up. So if we can get gross margins into the 60s, that would be quite good. And we really just need to see more scale with the company. Yeah, as I said, don't let these positive gross margin numbers make you think the company is fully profitable yet, because they're not. So if you look in 2020, they ended up with an operating income of negative 100 million. 2021 negative 87. So this was like, okay, we're kind of moving down, but then there's a big uptick in 2022, negative 128 million. So still very much burning money as they try to scale up, but it is nice to see those gross margins are pretty strong if they can scale up the business and reach profitability. Then talking about their balance sheet, I always like to take a look at these before investing in any company, and I recommend you do the same for sure. We have a cash balance here was $490 million. We did burn a bit and also converted some cash into short-term investments, which is completely fine. So yeah, the cash and short-term investment number is now $408 million, pretty solid. I don't have huge concerns about this company going out of business within the next 3 to 4 years, and hopefully they can hit profitability well before that, as long as they keep their spending somewhat in check. And liabilities, they do have liabilities on their balance sheet, not unexpected, but definitely a pretty strong cash position overall. And then going back to their initial investor presentation when they went public, they're talking about clear path to profitability, and this is what we all want to see when we're investing in these growing companies, right? Eventually they need to start making money, can't just burn forever. They originally said full year 2025 estimated making a profit on an adjusted EBITDA basis. So again, you're adjusting to take out some of those one-time costs and other things that they don't feel accurately represent the ongoing business. But it is adjusted, so not, just unadjusted, just so you're aware. And then adjusted free cash flow, we're looking at $24 million 2025 as well. Now, if we look at full year 24, what they're projecting, they are now saying adjusted EBITDA negative 47 to negative 37. So obviously we're off here, because from their investor presentation, they were looking at more like negative 10 million. And now a couple years later, we're projecting negative 40 million. So that would be one thing you might be a little concerned with if you were looking into it. Some other interesting news is we just had a massive buy from an insider, and I always love to see this when someone working at the company, maybe in a high-level position, is extremely confident in the future of the company and really buying heavy. Kevin Wheel, president of product and business for the company, spent $997,000, basically a full $1 million on stock at an average price of $364. That actually increased his holding by 62%. So it's not like he's a massive billionaire dropping $1 million being like a drop in the bucket. No, this was a large amount of money compared to his current holdings, and the stock markets did like this news. We saw the other day we had a bit of a bounce, and actually it's funny because this is when I was starting to think about buying. I know, I'm sure you guys know the feeling out there. You're starting to get interested in a company, and then of course it shoots higher before you invest. But I do think this is small potatoes, this move so far. And if they ever do scale up and hit that profitability that they're talking about, the future is much brighter than $4.26 per share for this company. So as I said previously, I'm not yet a shareholder in the company. I do have more research I need to do on it before I would buy. But so far, honestly, it's all looking pretty good to me, minus a couple small things. But overall, the overall story I think looks pretty good. Let me know if you're an investor in the company down below, whether you find them interesting, whether you would consider investing more in them at these prices. Definitely interested to hear. And let me know if you have any more details on what they do as a business model. I would definitely love to dive more into the technical details of the data they provide, how they make all this information searchable and stuff like that. Definitely very interesting to look into. Thank you so much for watching. If you've made it to the end of the video, if you didn't already, please hit that like button and subscribe as well. I appreciate every like and every subscriber I do get. I hope you've had a great weekend and you'll have a great week coming up. I will see you in the next video. Bye for now.